Good stuff.
So snow Thursday, isn't it?
It's supposed to rain.
Alright, ready?
It's supposed to be 46 degrees on Thursday, so I think it's going to snow.
Yeah, I got
Melt that snow.
scooping my deck off to make sure that all the snow melts off there so I can get the grill back up.
It's supposed to rain on Thursday.
Grill and rain. Grill last night? No. But I scooped the deck off so that when I want to, I can get to it.
What's that, sulfur?
Grills in the winter.
I
do. Why not?
Why is Ben's one?
You got not very many people do. You get the sliding. I just got my deck door. Open it. The grill's right there. One step outside. You've grilled in this winter. Oh yeah. Sit out there in your snow pants. No. Here's the thing. You just go out and check it. You don't sit out there and wait for it. All right, 14.4, everybody's favorite section. One of mine, merchant. Classic. Okay, and this is an interesting concept that that companies that you see all the time on TV, commercials, advertising for help because companies have problems with this. And it's called uncollectible accounts. So let's say, does anybody have a credit card? An actual credit? Nobody in here has a credit card. Really? Nobody does? Okay.
Just the debit.
Okay. So what happens is credit card companies or any company that says, you have 0% interest, for the first X number of months. Well, that entices people to purchase it. And most of them will pay you over time for their purchase, but some people will not have the money to do so. So let's say you give them $5,000 worth of product, and over the next 5 years you only receive $2,000. Some companies will allot for that loss, and some people will get credit collectors involved. You guys seen debt relief commercials all the time, right?
Yeah.
Debt relief, you know what I'm talking about? And basically what companies will do is they will hire a debt relief company to come in and say, okay, we're going to transfer this debt to you. So let's say I owe Merchant $5,000. Okay? And Merchant is not getting this money, not getting this money, not getting this money. So what Merchant will do, he'll turn to a debt collection agency, such as Draker, and Draker will buy my debt from him. So let's say I owe Merchant $5,000. Draker will say, I'll give you $4,000, and now he owes me. And Merchant will say, has to decide whether that's a good move or a bad move for him, because is $4,000 better than no grand? Yes. It's not quite $5,000 though. So, and that's where Draker will come in and say, okay, I'll buy it for $4,000, and I'm going to get that $5,000. I'm going to figure out a way to get that $5,000. And Merchant then, though, he's recorded that he sold $5,000 worth of stuff and that he's owed $5,000, but now when he puts the cash in, he's $1,000 short. So we have a gap there, and that gap is what's called uncollectible accounts. And basically, companies have a formula, and it's different for every company. Let's say for every $1,000 that people buy on credit, they have an allowance of a percentage. So whether it be I allot that $10 out of every 1,000 I'm not ever going to collect. because deadbeats don't pay. So that's an expense that I get to write off as a company. And merchant's going to have to deal with that expense. So it tells us in 14.4 that Coastal Aquatics estimates uncollectible accounts expense as 0.5% of its total sales on account. Sales on account means things that they've purchased but not yet paid for. For instance, I just had to go buy tires for my truck, which are ridiculously expensive.
How much was that, a grand?
Oh, I wish. $1,400. $1,400.
Just 4 sets of.
Just 4 tires. 4 tires. Awesome, huh? So, but what they did do is they said, well, how about you put it on a Sears card and you get 0% for 6 months. So I got 6 months to pay off $1,400, which is fine, you know. I'll pay off the $1,400, but that's a sale on account because I have something from them, but they don't have the money from me yet.
Just run.
Just run. Just run. They'll come steal my tires back and I won't be able to drive. Okay, so it says 0.5% of its total sales on account. Coastal Aquatics had $424,000 on account. Record the uncollectible accounts expenses adjustment E. So 424,000 times 0.5%. 0.5% is what amount? If I'm typing 0.5% in my calculator to actually figure it, what do I use? 0.005 times 424, 1, 2, 3. I have an uncollectible accounts expense of $2,120. So up here, I have an allowance for uncollectible accounts. Line 4, and this is adjustment E, and it's 2120. That's credited, and then down at the bottom I have uncollectible accounts expense on line 47, and that is what's going to be debited.
Wait, it's 2120.
2120.
120.
So let's say if they figured out, so I paid $1,400 for tires times 0.005. So Sears is figuring I'm not going to pay $7 of that on average. On average.
Where'd that money go?
Where's that money go?
Out of their pocket.
It's out of their pocket. I'm going to pay all of it because I don't want a bad credit score. And then I'll be on freecreditscore.com commercials, and I don't want that. You know? All right, that's 14.4. That's it. 14.5.
Nice.
Now we got to roll.
I'm way tired. No, that's 12 last night.
What are you doing? Get some sleep for your game.
He's reading the Twitter wars.
No,
Roll Tide.
Just watch one.
Okay.
He's got to go around the school and find another tired girl. And I'll tell you to leave it. She was something like that.
Do you guys know what depreciation is?
Yeah.
What is it?
Treating something like crap.
Yeah, it's something loses value. Alright, so Drager. Let's say Drager buys a work truck, right? Sweet work truck.
For Michael Neal's
Limo
limo
service.
service.
Michael Neal buys a limo, that's even better. We'll go back to that.
There we go.
Michael Neal buys a limo, $50,000.
High roller.
In the limo world, that's about right what they cost.
That's the movie.
And when you buy this initially, it is an asset for your company, right? But over time, does that limo keep the $50,000 value? No. Okay? So what companies do, and there's book values for everything. And book value means is, if you guys go to sell a car, you look on Kelley Blue Book, you guys know what I'm talking about?
Yeah.
That's the book value of your car. There's book values of everything. Cars, printers, computers, copy machines, on down the line. So his book value initially is $50,000. And what you want to do is you estimate how many years you're going to use this product. So let's say Michael Neal wants to use this for 5 years, and then he'll get a new one, right? So he has a 5-year useful life. So what he's going to do then is they're going to estimate the value of his product at the end of 5 years. So let's say you're $50,000 now. 5 years from now, what's it going to be worth? 35. Limos don't lose much value. 20. All right, 20 grand.
5 years?
So it's been determined over 5 years, it's going to depreciate $30,000. So your total depreciation is $30,000, and you divide that by the number of years that you're using it, and that gives you what? $6,000.
Every year, $6,000.
All right. So what you're doing here is every year you get to write off. And do you guys know what I mean when I say write it off? Okay.
No.
You have a total income of, let's say Michael Neal brings in $100 grand a year. Okay, that's his income. And from that, you're going to pay taxes on that 100 grand. But you can write off expenses against this. So every year, this would be an expense. So now I write that off. Now my income only shows 94,000. I pay taxes on 94,000, not 100,000. So all of your expenses you write off against your total income to avoid paying taxes. Right? Understand what I'm saying?
Isn't there like tax categories?
Sure there is. And that's why, let's say there's a tax bracket at $100,000, right? So let's say you have your income for your family is $105,000, or your business, whatever it might be. That's what your income is. But you're going to get taxed at 0.25. So if you take 0.25 times 105,000, what do you get? Somebody's got a calculator, don't they? 0.25 times 105?
$105?
105,000.
Oh. 25% or just 25?
Yeah, 0.25.
26,200.
Okay, so 26,000 and change, right? So now my net income after 105 is 79,000. Okay, that's fine. But if I can write off my income, if I can find some expenses to write this down, and I get it down to 99,000. So if I get to 99,000, my rate, 18%. So now I take 99,000 times 0.18, and you get what?
17,820.
17,800. So now I got 99,000 minus 17, and my income is now 82,000.
That's how you work the system.
Huh?
That's how you work the
I didn't do
system.
anything different. I just spent a little money, get rid of it, to do that. So that's what I mean when you write off something against your income. You want to write off your expenses so that you don't have to pay full taxes on all the money that you got coming in. And you got to find that right point. Sometimes it's not worth writing it off to get lower because you don't find that bracket change. But I know that, you know, a lot of people do this. I mean, you don't have to be wealthy to write stuff off against your taxes. We do it, my wife and I do it every year. At the end of the year, we find out exactly where we're at in December, and
You'll spend a whole bunch
check
for
our,
Christmas.
no, you can't just spend it. I mean, you can't just go out and buy a car. But for a non-company, you know, like if you're just a household, you need to find like a charitable contribution. So like at the end of the year, we'll cut a check to the church or whatever to give them money because you get to write that off as a charitable contribution against your income to make sure that we are in.
So it can't just be a regular expense.
No, it can't be a regular expense. Unless you're a business. If you're a business, it's different. If you're just a standard person, then there's certain categories it's got to fall under. But it's not illegal. It's
Gotta buy a new gator for the kids.
That's right. You know, if you buy anything for your job, you can write that off. It's like if I would have bought old Ladybug here myself, I could write that off. But good schools took care of it for us. So, all right. So it tells us in 14.5, you're gonna calculate the expense for a computer printer costing $1,600. Estimated salvage value is 100. Useful life is 5. And this has its own page somewhere. 14, I think.
Yep.
Yep, it is 378.
Me?
378. So we're going through the exact same thing that we did up front with the limo. It's got an original cost, and the original cost is $1,600. It has a salvage value of $100. So the total depreciation expense is $1,500. Divided by years of estimated useful life, they said it's 5. The depreciation expense is $300. So the original cost is $1,600. Depreciation is $300 first year, $300 second year. So at the end of the second year, because it asks you, calculate the book value of the computer printer at the end of the second year. So you've got 1,600 minus 600 gives you 1,000.
That's it for the day.
Wait, don't we have to put it in the thing? In this thing?
Yep, so now it says, it actually tells us we don't have to do any computation. We're going back into our documents. It says December 31st, Coastal Aquatics determined the total depreciation expense for office equipment, store equipment. Ooh, okay. So there's no calculation here, it's just telling you. So you've got depreciation expenses. Make sure you get the right amount. It says the depreciation expense for office equipment is $61.20. Well, I know up top I have, this is called accumulated depreciation for office equipment. It's a credit balance. So that's going to be F, and it tells us that it is $61.20. And then the debited amount would be under what? Line 38 says depreciation expense office equipment. So that's F. 61.20. And then we have store equipment, 5,060, same deal. You have accumulated depreciation store equipment on line 12. So that's EF. This is G, adjustment G, and it's 50, 60. And then at the bottom, line 39 is G, that's 50, 60. Okay, we're done with the adjustments for now. There is one more, but we don't calculate it yet. We will. So now what we're going to do is we have to extend these amounts into the appropriate columns. And remember, income summary on up is in the balance sheet. Here's the line. Dividends up, balance sheet. Income summary down, income statement. So all I have to do is extend my trial balance totals into my balance sheet columns. The only time it would ever change is if I have an adjustment. You need to make sure that you get those. So cash is $18,485. Petty cash 300. Accounts receivable 15,485.25. Allowance for uncollectible accounts. This is a credit balance, and I have another credit. So do I add them or subtract them? Add them, and that gives me 26,3480. 3680. Right? 263680? No, it's not.
I like 264484.
Yep, that's what it is. 264484.
But I thought I had a credit balance.
It is. I did that wrong. 264484. Office equipment goes over. That's 35,000. 487.25. Accumulated depreciation. I have two credits, Adam, 6120 plus 12,485. 18,000 is the credit. 605.25. Store equipment, 40,000. 849.50. Accumulated depreciation store equipment. I've got credit, so I got to add those. Gives me 20,543.25. Accounts payable, 18,482.28. Next line is federal income tax payable. It's blank. Make sure you leave a blank spot for it because that's going to be our last adjustment, but we don't figure it quite yet. So employee income tax payable now is $998. Social Security $774.07. Medicare is $181.03. Sales tax payable is $1848.35. 24 for unemployment. 162 for the other. 950. 80, 75, 10,000, 175, 12,000, 577, 45. Next page, dividends still goes in the balance sheet, so that's 21. Now, income summary and everything else goes in the income statement. So make sure that you're doing this correctly. Make sure if it's in the debit column that you make sure you only put it in the debit column over here. It's not a credit. So I've got income summary debit of 13,848.05. I've got sales, that's a credited amount, 845, 828.09. Sales discount, that's debited, 648.25. Sales returns and allowances is debited, 8157.27. Purchases 389, 184.01. Purchase discount is a credit amount, 4615.25. Returns and allowances is 94.97. And then all of my expenses are going to be debited. So advertising expense, 15,280, 1285, 6482.27. Then I've got 6120, 5060, 5400. 4568, 97, 16,184, 25, 24,000, 204, 180.85. 48, 28, 10. 39, 45, 25, 21, 20. We've got 42, 64, 28. And then do not
Start that 40.
put the 40 in there yet.
Are we done for the day?
No, let's keep going.
What do we have to do though?
It's like my favorite thing.
No. Then can we have work tomorrow?
Yeah, we'll work a lot tomorrow. Okay, so now I've got all of these extended, and the last thing we have to do is we have to find out what our total taxes that we owe is going to be. So what I'm going to do is on 374 on the side here, it says I want this amount before federal income tax. I want the total of the income statement credit column. Boys, you guys give me that total. Total of the income statement credit column. So it is everything from, it's not very many numbers. It's 1, 2, 3 numbers. Can you handle that? Boys, I want confirmation. I want an exact number because I don't want to do this wrong. Girls, I want the income statement debit column total. So everything from I want all these from 13/8/48/05 to 42/64/28. See what we get. Give it to his brother.
Can I give it to your brother?
You know why I got it? Because my initials are C1.
You got the same thing? Same thing Wyatt got?
Initials C.
What'd you get? Okay. We're sure. Okay. Say it again. 859. 940. 34. Girls, you got a number for me?
I don't know what everyone else has.
What do you got?
Macy, what did you get?
Number 5.
So ours are.
Are not the same?
No.
Sweet. Caitlin's gonna set you all straight. Good Lord.
What's the actual one?
What'd you get?
I didn't do it.
Boys, they need help. We can't get a matching number. Debit column. Because I'm telling you, if this doesn't come out right, and you don't have this exactly right, it's going to mess up everything.
Just look at the answer book.
Come test time, you're not going to have an answer book. You're going to have your own calculations, making sure you do it right.
Yeah, Chris, did you hear that?
We should try it sometime. Test.
Do I got to do it myself? Probably. Alright. Alright, let's see here.
Now I got a different number.
What'd you get?
$714,284.10.
See if anybody else gets it.
I did start last game. I mean, I was seeing my son giving high fives, but I started.
Did you know that rule? You go out of bounds.
Yeah. Were you on one of the lives? Were you the one that did that?
No.
We love the shots out. Everything like practice.
You know the rule that you can't push a defender into the tournament.
I had a 3 tonight.
I want to see it.
Doing
I want you to do it high.
In warm-ups,
I got it again.
in warm-ups,
I did it again. I got
You gotta go the other
I'm out burning. I was making 3s and a half. I looked at you and I did this. But
Oh, I got
you were looking
that,
down.
but then I got
So
36.
she gotta go.
We have the same numbers except for the cents.
It's gonna
The
be
cents is
done.
off. I have $714,284.10.
What is this?
714,284.40.
How do you do that?
40.
Oh, I got 37.
I got 40. It's 40. I promise you. Boom. I don't mess up. I don't mess up, Michael Neal. It's right here. Okay. So now, that amount goes in here. And come test time, I don't want to hear I didn't add it, because merchant, this would be a great opportunity for you to practice your putting numbers in skills, because they'll seem to lack sometimes.
Study hall, I'm coming. I'm gonna watch them.
Okay, so now I'm going to take 859, 940, 34 minus 714, 284, 40, and get what?
145.
4.
145.
7.
Do we actually know that? What'd you get, Erica?
$145,655.
$655.94.
Okay.
Okay, and what this number represents is your net income prior to being taxed. So now I'm going to tax it.
Yes.
So this is my net income, 145, 655, 94. On the other sheet at the bottom, you turn it like this, I have federal income tax. And what the government does is the democratic way, the more you make, the more they tax. So, what's that? The democratic, it's the democratic way. All right, so,
What's the Republican?
flat tax. anyways, you've got your first $50,000 is taxed at 15%. So that means the first $50,000 of income is taxed 15%. Then anything on top of 50,000, from $50,001 up to 75,000, you're taxed at 25%.
So if you're at $50,001,
If you're no, if you're let's say you make $50,001, the first $50,000 is taxed at 15%.
Oh my
The next
God.
$1 is taxed at
25.
25%.
So you get 75 cents.
You get 75 cents out of that dollar. All right, the next 25, so from $75,001 all the way to 100,000 is 34%. And then anything on top of $100,000, hold on to your hats. 39%.
That's what
So you get $6 for every for every 10 you make. You get to keep 6 of it. Obama gets the other, or whoever. Our nation's leaders. Okay, so our first $50,000 at 15% gives us what? So we take 50,000 times 0.15, and you get, should be 7,500, right? The next 25,000 at 25% should be 6,250. Correct? So our next 25 is 34%, and that is 8,500. Okay, so now we're up to 100,000. Our income was 145,655.94. I've already taxed the first $100,000 of that. So the amount that I have left to tax is 45,655.94. So I take that times 0.39.
No, you take the time.
That gives me 17,000.
I thought it was taxed at something different.
It is 39%. 17,805.82. Okay. So I'm going to add all these up.
Is that a number that's going in our federal income tax?
It will, yes.
Uh-oh.
70?
What do you get?
$40,055.82.
$40,055. .82. Now, what this is the amount of tax that I owe the federal government for my income. Most companies, if you are at all intelligent, will save money throughout the year so that at the end of the year they don't have to come up with that full amount. The amount of money that this company has saved is right here. Bottom line, our federal income tax expense, they have saved $40,000 even. Do they have enough? They need $55.82 yet, right? So that is my adjustment. So my adjustment, E, F, G, this is adjustment H. I need to add $55.82 right there. And then, in turn, I will come up top, and I have a blank column, federal income tax payable. Under adjustment, that is H, and that is 55.82. And since I'm already here, I'm going to take that 55.82 and I'm going to slide it over to the balance sheet column as well. 55.82. And down at the bottom, my federal income tax now, I had 40,000. I add 55.82, so I'm going to slide that over to 40,055.82. And we'll pick this up tomorrow. Wasn't that fun?
No.
No, it's close.
Good day at work.
Went to work today, boys. Went to work. You're going to get done with this, you're going to like, holy cow. That's a lot of stuff.
That's